Hello and welcome everybody to today's Commodities Corner presentation presented by the Gold and Silver Club. So during today's session, we will of course be covering live market analysis. We will be providing you with a watch list of trading opportunities, a forecast of where we expect gold, silver and oil to be heading next, answering questions and providing live support. As always, we will keep it very interactive. We've got a lot to cover during today's session, so any questions at all, feel free to put those into the chat function, and any questions, comments, contributions, as always, are very welcome. So before we get started, let me introduce you to the Gold and Silver Club. The Gold and Silver Club is regarded as the go-to authority on commodities trading. As internationally respected experts, our analysis and our opinions on the metals, the energies and the agricultural markets, they're routinely sought by major financial television channels and publications, which include Bloomberg, Reuters, CNBC, the Financial Times, the Wall Street Journal. For further information on the Gold and Silver Club and our expertise, please visit www.thegoldandsilverclub.com. Okay, so with that, we'll just take you out to a bird's eye view of the markets, really what's gone on over the course of this week. So one of the points that we need to have a look at here is the overall relative performance of markets over the course of this week. And you will note here, the VIX has had an extremely exaggerated move over the course of this week. In fact, the VIX broke out over 25%. Huge move to the upside. That volatility off the back of the VIX, the volatility index breaking down the previous week down to 10-year lows, and that big pop that we've seen to the upside has essentially helped to create volatility in the markets. We've seen certainly a large corrective move on US stocks. For example, the S&P 500 had its biggest one-day move down since September of 2016. The US dollar has broken down to 6-month lows. We've seen gold up over 2%, silver up over 2%, sugar up over 4%, oil up over 4%, and heating oil up also over 4%. So it's been a very active week in the market, guys. I hope you've made some money and taken advantage of the opportunities. But what we'll do, we'll assess the markets, how they're looking right now, what we can expect for the rest of today, and also as we head into next week as well. So first up, the volatility index. So this has come off the 10-year lows that it broke down to last week, and in fact it's been stuck within that sort of range within the last month or so, as we've seen a number of stock markets such as the Nasdaq, the S&P 500, the Dow Jones, all breaking out to all-time highs. In fact, that was the case even on Monday this week, and then we've seen a very large correction on Wednesday. So with that, the volatility index has spiked, so that means fear in the market has gone up, and with that we've also seen, of course, the price of gold and silver go up a lot as well. Now, we've seen this amid political turmoil in the United States. We've seen gold rising over 2%. And we've also seen it have its biggest one-day gain since June last year. So we've seen some big moves on gold over the course of this week. Now, the decline in the dollar index has been attributed to political problems from Trump, which I'm sure a lot of you are aware of, him firing FBI Director James Comey, which has also caused volatility. More recently this week, Trump discussing very sensitive information. So him discussing classified information with Russian diplomats has been another story which has hit the headlines over the course of this week, and that has caused volatility. And there's also now question as to whether Trump can push through tax cuts, deregulation, and overall this has caused some fear in the markets over the last few days here. And we've seen a significant correction with the stock market, but with that there has been some great opportunities. So for example, gold has given us a great buying opportunity, also silver as well. Now, we've been in and out of this trade. We've now exited. We're flat on this move now. We've taken advantage of a breakout. This is one of our top trades over the course of this week, which was capitalizing on the breakout on gold. We actually got into this trade last week. We discussed gold and silver on last week's weekly Commodities Corner as well, what we were anticipating next, and we got the follow through we were looking for. Quite a significant breakout and follow through actually over the last week. So you can see where gold has been able to pop all the way up to 1,260 US dollars per ounce. Has been a sizable move. We came off a major underlying trend channel. Overall fundamentals supported the move. We discussed last week that if the US dollar was to continue to break down, it was very vulnerable to a lot of clean air lower. It didn't have much support if it was to break below the 98 zone, excuse me, and that has been the case. We'll have a look at that very shortly on the chart, but essentially the US dollar has broken down to 6-month lows. It's the big story at the moment, and off the back of that, a number of commodities, which of course we trade priced in dollars, have all gone up as a result. Sugar, coffee, gold, silver, platinum, oil, they've all rallied over the course of the last couple of days here. So we'll have a look at that very shortly as well. In terms of the next major news items, one that you definitely want to have on your radar is next week. We have on Thursday the OPEC meeting, and there's been a lot of anticipation for this. In fact, we saw oil break out 3% on Monday off the back of Saudi Arabia and Russia coming to an agreement that they would look to extend the output cut for 9 months rather than 6 months. That caused a breakout to the upside for oil. In fact, oil on that news broke out 3% to the upside earlier on in the week. So next week on Thursday, there should be a great trading opportunity off the back of that as well. So that will be the OPEC meeting next Thursday. Then, of course, as we head into June, we've got the UK election, then the FOMC statement, which everybody is watching closely. Traders are watching that closely. On Wednesday, the 14th of June is going to be a major FOMC statement. This is one of the FOMC statements where Janet Yellen holds a press conference afterwards. There's 8 FOMC statements a year, but 4 have a press conference afterwards, and Janet Yellen is expected to increase interest rates at that meeting. So that is definitely one for your diary. So if you've got your diary in front of you at the moment, these are the next major news items you want to have on there. So next week on Thursday, the OPEC meeting. The week after that, we've of course got Friday's non-farm payroll. The week after that, we've got the ECB, European Central Bank meeting as well. And then the following week on the Wednesday, we have the FOMC statement. And of course on Thursday, the 8th of June, we've also got the UK election. So there's lots coming up. This volatility provides good opportunities, as I'm sure you are aware of. And in terms of major news items we've got coming up over the course of today, in terms of scheduled news, we haven't got a whole lot. So what we could see is just a continuation of some of the trends which have been forming today, which is the US dollar selling off and certainly a number of commodities going up against the US dollar at the moment. We have one of the FOMC members speaking at 2:15, so in approximately 8 minutes time. US Baker Hughes oil rig count, which is due out at 6 o'clock London time today, which will provide some volatility for oil too. So with that, I'll just talk you through the 2 types of trading that we like to capitalize on using the binary.com platform. Essentially, these are higher and lower payout trades, so very straightforward. So the beauty of this is, particularly if you've got a lot of volatility in the markets as you have at the moment, some of these trades, if you're trading oil, if you're trading the stock market, if you're trading it on another platform outside of binary, can require large stop losses, and they require you to be fairly nimble on those moves. What you'll find with binary trading in this way is that it's straightforward in that you don't need a stop loss, you don't need a take profit target. All you need is to call the correct movement of the market, so whether that is up or higher or lower. So essentially what we need to get right is the entry, of course, the timing of our entry, also the correct direction, so whether that's higher or lower, and then the exit as well. It's very good also for shorter term trades if you're looking to take advantage of momentum, breakouts to the upside, breakdowns below support. Shorter time frames can work quite well in this way as well. So it's a great tool, additional tool for your trader toolbox. Very profitable to trade in this way, especially with volatile markets. So again, these are 2 types of trades we look at here, higher and lower. Essentially, I'm sure a lot of you are aware of this, it's all transparent. You put in your start time, your duration of the trade, the payout that you want. You know what you're getting in terms of your net profit on the trade and how much you need to risk, what payout you would get on the particular position. It's all transparent, so you know up front just whether it's going to be a good return for you on a particular trade or not. And again, it helps that you don't need a stop loss and a take profit in these situations where there's volatile markets, and you can take advantage of those moves via a binary trade. So with that, what we'll do, guys, we'll go over to the charts. We'll look at the US dollar we'll have a look at first. In fact, we'll look at the inverse correlation that is having currently on a number of different markets. We've seen that have quite a big impact over the course of this week. So what I'll do, I'll shift over to my other screen, and hopefully you shouldn't lose any sound. You should be able to see my screen okay as well. So first of all, just a quick confirmation, if you could let me know whether you can see my screen okay. I'm on the US dollar index at the moment. Should be able to see that okay. Just a quick confirmation, guys, you can still hear me okay, and you can also see the presentation. Perfect, thank you, guys. Okay, super. So with that, first of all, we've got the US dollar index on the screen at the moment. So what do we need to bear in mind about this chart? And there's quite a lot going on this screen. I wanted to include some more in-depth indicators just to really show you what's happening at the moment. We could look at a raw chart, but this just gives you a better feel of exactly where we could be heading next, because essentially we've broken through this critical trend line. So this time last week, we discussed the potential for the US dollar, if it broke through support, had clean air for a move back towards the 99 level and below that 98. If that gets broken and we close below that level, then major technical damage has been done to the US dollar, and we could start seeing a lot of commodities rally inversely to that. So the US dollar, it looked like it was going to get support yesterday around the 97 zone. We got a retracement. However, we've had another breakdown below support today. So the US dollar is potentially on track for rolling over, breaking through support here, and a continuation pattern to the downside. So right now, what can we assess on the US dollar? Well, essentially, short term, it is a little bit oversold, although it bounced yesterday. We are looking at this from a weekly closing point of view, because if we close at this level, we are breaking through some major levels of support. And you can see here, this is the weekly chart for the US dollar index. There is really a lot of clean air below this level. And unless the US dollar can quickly turn around and close back above the 98 zone today, technical damage has been done, and we'll be looking for more downside in the weeks to come here, because this is a very significant breakdown of a huge area of support. This is the weekly chart, and it's really taken out major support over the course of this week. What does that mean for currencies? Well, essentially, a lot of currencies that trade against the dollar would gain strength off the back of US dollar weakness. So we would expect them to go up versus the US dollar going down. So that's the first point to note at the moment. Unless this completely changes over the course of the US session this afternoon and we see a full-on retracement higher into the close, otherwise the US dollar looks really vulnerable to more downside, and that will of course help gold and silver. So gold at the moment, we've taken advantage of this breakout over the last week. Right now, we're awaiting to see really what happens with this price structure today. You can see it's come back down, retested, in fact, quite interesting, a previous level of resistance, potentially turning into support here. Also, it's found support of the 200-day moving average as well. And there's a bit of an inside candle developing off the daily chart today, which could give rise to a trade setup as well. So this is a 200-day moving average. Interestingly, we're also finding support at the 50-day moving average as well. So you've got these 2 points of confluence and you've also got another moving average here. So we're getting quite a lot of confluence here with a major support zone. And so far we're getting a bounce. Now, we are short-term overbought here for gold, but that doesn't mean it can't go higher. In fact, it did pull back from this overbought condition yesterday where it came up to the 1265 zone. It's pulled back roughly in the region of about 150 points or so. So it has actually had a pullback, corrective move. It's getting support at the moment, and I'll be interested to see how this closes the week, because it has been quite a firm week for gold. We were looking at this last week, the potential based off the weekly chart where we produced a rejection candle, major underlying support as well on the horizontal, the trend channels. This is the weekly chart, a raw weekly chart. You can see the price action here. We produced a supported bounce last week off this underlying trend channel, horizontal support, and it's followed through this week, although there is some overhead resistance here. So the question is now is whether this is it for the gold move. Is this going to be the peak from this week, the high of 1,200 and around the 65 zone, 1,265? Is that it for gold? Is it going to roll over and start breaking back down again? Or is this the start of something more significant? Are we going to see a further breakout? You can draw a pennant formation on gold at the moment, and you can see here we've got higher lows and also lower highs as well. So essentially, as we go into next week, we can look at also a breakout opportunity on gold here. If it breaks back above certainly this week's highs next week, breaks above this resistance, we could get more follow through. The longer it consolidates and moves sideways, it will build up more pressure for a decisive move up or down. So you could argue also from a bearish case that this is short-term overbought. We're actually developing a bear flag formation, but it would need to confirm that, and it would need to get a break back below the 1240 zone to confirm that this is it, that it's going to run out of steam here. Also, all eyes are on Trump at the moment, and to see whether we do see an escalation in the political turmoil, which has really been hitting the headlines over the last few days here. So a lot of eyes are on that at the moment. Also, the FBI investigation as well, which we're watching very closely too. That's had a lot of impact on certainly the S&P 500 as well. We go over to that, go over to the stock markets. So if we move over and have a look. We can look at the Dow Jones as well. The S&P 500, it did break down yesterday. Well, actually, the big move was on Wednesday. Biggest one-day move since September of last year. So that was quite significant. September 2016, the biggest one-day move since that point. Now, we have broken down below some critical support, but we are hovering at the moment around 2,370, that zone. And this is a consolidation zone. So it's a bit of a decision point here for equities as we go into next week, as we close today as well. Some technical damage has been done, but it could still find support here and rally depending on how we close. This is a supportive zone. If I'm looking at this for a potential short, but for a better chance to get in a potentially a higher price. So something along the lines of a rally higher, which doesn't get any traction, and then a retracement and a breakdown lower. So essentially rallies, I'm looking out for rallies to get sold into, which could give us a selling opportunity into equities if we're going to see them break down. Short term, it's oversold. It became oversold after this big move down on Wednesday. Don't want to sell it at the lows, but at the same time want to allow to see whether it can retrace a little bit higher. Ideally, if we get some sort of sell signal at 2,380, if it has a failed move around that resistance zone, if previous support becomes a level of resistance, that could be a good opportunity to then sell into a rally, providing we don't see a full-on breakout to the upside. I don't really see any catalyst for a stronger rally at the moment, but for those of you who might trade the S&P or the indices in general, they get a lot of movement within the later hours towards the close. So there can still be a lot of price there could still be a lot of movement on this throughout the US session today, into the close later on today as well. I'm very interested to see how the weekly chart closes as well, to see what sort of technical formation we have on the weekly chart and also on the daily. Also, there is an inverse correlation between the equities here and the movements on gold and silver as well. So essentially, if we do see more downside for equities here, that would likely provide support for gold and silver, or if they manage to build up a little bit more support and manage to rally, that would provide downside for gold and silver from an inverse correlation point of view. But at the moment, gold and silver, they're holding quite strong so far today, and that is because the big story today is the US dollar index, which is breaking down again to 6-month lows. It's taken out yesterday's low, and the question is, can it find support around the current level? 97 is the next major supported level. If we have a big leg lower here today for the US dollar index, if we get another flush out, that will provide a lot of support for commodities. So just be aware of that, be watching that for sure. If we go over and have a look at the Dow Jones retested underlying support yesterday. It's rolling over. It is giving us a sell signal at the moment. However, it's generated that sell signal after a very significant move lower. So ideally, I would rather get back in here at a better price. We've been long the S&P, taking advantage of the breakout following on from the second round of the French election, banking profits on the S&P 500 at the all-time highs coming out of that trade. And now we're seeing this roll over, this corrective move at the moment. I want to see whether we can take out major underlying support or whether rallies get sold back into. So watching this carefully, there is some underlying support at this level where we're at the moment. Short-term equities are oversold. That doesn't mean they can't break down lower. They could do, but I'd rather get a better price and get a bit more confirmation before going for another position here at the moment. But I'm watching it carefully, and we're also watching the correlations. The NASDAQ as well, which I would definitely keep an eye on, broke out to all-time highs earlier on in the week, only to then have a very large correction as well on Wednesday. But it is noteworthy, that breakout to all-time highs. So are we going to see traders buy this dip, or is it going to be the start of something more significant? So I would also keep an eye on that. And for me, we need a bit more confirmation. We need the daily close today, the weekly close. You can take advantage of short-term momentum. Certainly if we go over to gold, silver's actually ramping up at the moment. So silver's had a pretty strong day actually today. So after we saw a retest on silver, I'll take you over to, let's have a look at a raw chart here. Actually, I'll take you over to a more detailed chart. We can switch between the two. So silver's price action, we were looking at this for a buying opportunity last week. So those of you who were on the session last week, we were looking for more upside. Silver was extremely oversold. It was the most oversold it's been in a couple of years in terms of this corrective move, which has been consecutively 3 weeks of lower highs, lower lows. Very extreme oversold condition for silver. It had a signal here for a buy for us, where we got in for our buy right at support here, so around just above the 16 level is where we entered into this trade. Around the 1630s is where we positioned ourselves for a long. We've taken advantage of that move over the last week. It's come into overhead resistance at 17 and found resistance there, pulled back yesterday. Quite a significant pullback, I should add as well, yesterday, but it's ramping back up today, which is interesting to see this sort of price action at the moment. We're coming into resistance again at the 21-day moving average. If we get a break above that level today and a close above the 21 MA, that will be quite significant for silver, and we could see more of a follow through. Silver on the weekly chart as well, we did identify this as an opportunity. So silver very clearly came to a bit of a crossroads in terms of major support going back on the chart here to 2016. So you've got 1, 2, 3, 4 bounces. So a lot of traders obviously were looking at that level. You've also got that zone as a, so you've got this major underlying trend channel going back to 2016 on silver, and you've also got this additional area of support here on the chart as well. 1, 2, 3 bounces if you draw in this trend channel as well. So these certainly are relevant. I mean, obviously traders are looking at these levels, they're taking positions off these zones, as well as marrying that up with research, fundamentals, seasonality, the cycles, and so forth. They're obviously looking at technical levels very clearly as well. And we've also had a retest of the 76.4 Fibonacci retracement level, which is a very key zone here for silver. When we get these corrective moves lower, it's normally one of the major lines in the sand for silver. So the fact that we held that level on a weekly closing basis, we've had a pop above last week's highs here, so we have had some good follow through. Of course, now will we get the big question is whether we'll get more follow through this week. If we are just going to come up and have a shallower high today, if we're going to come into some resistance here around the daily highs, the 21-day moving average overhead resistance, can gold and silver follow through more today? We want to observe the weekly closes on a monthly basis as well. Note where we are on a monthly, this is a monthly chart. Really interesting. I've had these levels in for a long time. I've not adjusted these levels. These have remained static on my charts. And you can see here where essentially on my monthly chart, we're finding support at a major zone on the monthly. This is where we broke out in 2016. We broke out from this pennant formation, a much larger pennant as well, going all the way back to 2011, where it had been in a downward trend and a corrective move lower for silver since 2011, since it blow off top here where we saw a move all the way up to $49 per ounce. But we've had obviously a very violent correction since then, which has been one of the most significant bear markets in silver, the second most significant in history. But at the moment, we're finding support at a major underlying trend channel going back to 2015. We're bouncing off that level at the moment as well. So it is quite an important zone here for silver. Is this going to potentially work out to be the all-time low for silver in the weeks and the days to come? It's to be decided, really. We'll have to see how this pans out. I think it's far too early to make that sort of a call. We do have the FOMC statement coming up in June, where the Fed are anticipated to increase interest rates. But of course, at the moment, a lot of this move into safe havens, the move that we've seen in the volatility index as well, and the sell-off on the stock markets is due to political turmoil and turbulence at the moment. So if that calms down, then we could potentially just see a resumption of some of the trends that we've seen. But if we don't see that start to calm down, if we see more escalation on the political side with Donald Trump in particular, we could continue to see additional momentum to the upside. We also saw all the hacks over the course of the weekend as well, the cyber hacks, which again have provided a little bit more safe haven bid for gold and silver. So there's been a lot going on over the last week, and ultimately you can see how gold, silver, they get bid back up in these times of uncertainty, fear in the markets. We've talked about this before on our training sessions that we've done on a monthly training sessions, that volatility, when you see fear, and when the VIX goes up, when there's volatility in the market, that is very good for gold and silver. This is VIX at the moment, the volatility index, and it's currently trading right at the weekly highs here. So we've had quite a significant pop higher for volatility. I mean, it's very significant pop, over 20% move here for the VIX. It's now back up to the highs going back to April, and it's had a very significant pop over the course of this week. Now, the question, of course, is whether that will continue to follow through. So with that, we'll move you over to oil as well. So we do have the OPEC meeting, which is coming out next week, and that will likely be another catalyst for a move here with oil. So we've got a few zones to look at for oil, quite a lot to look at in terms of the price action. So one of the most notable points on oil is the fact that after last week, it's after the capitulation that we saw when we broke down all the way with US oil down to $43 per barrel, we had a very significant snapback in price, came into major underlying support, continued to follow through from that zone. Monday was the real catalyst for one of the larger moves here, where we saw a 3% move to the upside. That really confirmed here for oil that it was going to be able to retrace and resume its upward trend. You've got a classic V-shaped reversal pattern here, where you get oversold, and essentially what happens is when you break through a key level of support, you see a lot of margin calls, liquidation of positions. So traders who've got possibly large positions in the market, or they can't take such a large move if they've been holding a large buy position in oil, and they just have to either choose to come out of the trade or put more capital into their account. often if they just get margin called, they can't get out of the trades quick enough, or they can't put capital into the account quick enough, they get margin called, and that results in very quick movements to the downside, stop losses getting triggered, and that's probably what happened here, where we saw just a complete takedown for oil over that 48-hour period where we had a huge move from 47 down to 43, an additional $4 move below key support, but very quickly that's been bid back up, capitulation into major support, got very oversold as well. We've seen a snapback in price over the last week and over the last couple of weeks now, and of course we've got more anticipation as we come into the OPEC meeting. This has been the case if you go back to the last couple of OPEC meetings, that prior to the OPEC meeting, oil does tend to get bid back up, and a lot of the time it is due to news revolving around the actual OPEC meeting. In this case, we saw this major move on oil over the course of this week. The catalyst, Saudi Arabia and Russia, coming together with an agreement on the table to go ahead and increase the output by additional 9 months instead of 6 months. So that could have a big impact. But right now, oil is breaking out. You can also look at the inverse correlation with that by trading commodity currencies. That could be, for example, looking at markets such as the US dollar Canadian dollar, which moves inversely. We've seen a breakdown in price for the US dollar Canadian dollar over the last week. So that's continued to roll over. So I would look at that also. You can trade the inverse correlation. The Canadian economy is very dependent on their exports of commodities, oil being one of those. So therefore, when you've got strength in oil, provides strength to the the dollar as well. And with that, the US dollar Canadian dollar moves inversely to oil. So when oil is breaking out, you can also take advantage of the opposite move on US dollar Canadian dollar. Also, what is noteworthy at the moment from oil is the overall price structure on higher time frames. So we can just take it out to Brent crude oil. And although we took out major support on the monthly chart here, what was interesting, so some technical damage was done. And this is something to look out for on the US dollar. It could do this. I think it's unlikely we'll get any sort of sudden retracement this week, or at the moment anyway. I don't think there's any catalyst to significantly move the US dollar higher, but we'll see how things transpire in the days and weeks to come. But this has been an example of a major underlying level of support broken down for UK oil, Brent crude oil. But on the monthly chart, you can see very quickly it's retraced, bid back up, and in fact, we're trading back at $53 per barrel after it came as low as $46 per barrel. So we've seen a very fast retracement there for oil. On a weekly basis, we've now got back above this underlying trend channel, so broke through it, overshot support. Last week, inside candle developed on the weekly chart. That's broken out, and we can see good follow through here with oil as well. It's back up and running. V-shaped reversal pattern, got bid back up from those lows. We can see the move, which is underway at the moment. Very quick move here over the last couple of weeks. This is a classic V-shaped reversal pattern, and really clear to see on a chart. V-shaped reversal, let me just show you that. You can see nice V there, formed by this capitulation, and what characterizes a V-shaped reversal pattern is the speed at which it broke down. It matches that in the speed that it goes back up again, and you can see that in the amount of days. If you count to the left and then count to the right, the speed at which we broke down after we came below major support is the same speed at which we came back up. So these are quite very fast moves back up to the upside. So if you can catch those moves, and particularly binary can be quite useful to take advantage of these moves where you don't need a large stop loss. You can take advantage of shorter term moves without needing to have a big stop loss to allow for the volatility. It can be quite useful to trade on the binary platform for oil, for example, equities as well, where you get a lot of day-to-day movement, but you're just looking to take advantage of your accuracy in calling it, whether it needs to be higher or lower. So of course, over the last couple of weeks, the overall trade has been higher. Prior to that was lower, was the right way to go. I'm looking for this to get potentially into an overbought condition as we get after the OPEC meeting, so I'll be watching out for that. It has been the case previously that oil can get bid up in anticipation of the OPEC meeting, a bit like buy the rumor and then sell the news. So you could see oil get bid back up between now and Thursday. That's not a guarantee, but certainly momentum at the moment suggests oil could go higher. It's broken above a lot of key resistance. There's some clean air here, certainly for UK oil. I don't see much resistance here until about $54 a barrel, which is about another dollar move higher here. So what we could see is oil getting bid back up between now and next Thursday, so approximately over the next 6 days. And we could see continuation to the upside, momentum to the upside. But then when we actually get into the crux of it and we actually have the OPEC statement be delivered, or the OPEC meeting, we'll see if we get additional follow through on that, or whether it's just too overbought by that point. If everything's already been priced in to the market, and then we see profit taking and potential resumption of a downward trend. But at the moment, it could have more upside to come, but it will get overbought if it continues to go up to, for example, the 54 zone for UK oil would suggest that. I also like taking advantage of the inverse correlation with US dollar, Canadian dollar as well. That can also be quite a lucrative way to take advantage of moves here too with oil. So as you can see, no shortage of trading opportunities at the moment, guys. So hopefully that just gives you a bit of an insight as to what is going on at the moment, and what we're looking at trading opportunities as we go into next week as well. Now, of course, if you would like to be kept updated on the trades that we're taking, including exact entry, exit, take profit on every trade that we take at the Gold and Silver Club, if you'd also like to join us for our live trading rooms during the week, have access to our private members academy as well to go through all of our training video, all of our resources, all you need to do is go over to www.jointhegoldandsilverclub.com. Okay, so it's I'll put that link just into the chat there for you as well. So that is www.jointhegoldandsilverclub.com. So how does it work? What does it include? Essentially, by being a member of the live trading room and the Gold and Silver Club private members academy, you get access to all of our trading strategies, our online training course. You get exclusive weekly live trading room webinars during the week, as well as the recordings of every session. So if you enjoyed today's analysis, today's session, we go into a lot more detail, and you can get access to that exact entry, exit, take profit that we are taking. Every single trade that we take, you get provided with that as well via SMS notification and email. 2, you get real-time notifications, so you're not missing out on trades, details of where we're entering, exiting, the inside track, which is a week-ahead trading plan and watch list every single week, and access to our Private Traders Academy members website, which has got a ton of resources which you can take advantage of. So again, guys, to get access to that, to make an application, all you need to do is go to www.jointhegoldandsilverclub.com, complete the application form, and we will get in touch with you ASAP. Okay, so fantastic. So with that, guys, I wish you good trading, profitable trading. Of course, very much look forward to hear from those of you who will be making an application to join us at the Gold and Silver Club. Have a fantastic weekend, and we'll see you all on the next one. Okay, and of course, thanks again to the team at binary.com for hosting today's session, and we'll speak to you real soon. Thanks, guys. All the best. Take care. Bye-bye.